Hey everyone, welcome back to LogTech Live. I'm Eric Johnson, your host as always. Well, not always. Sometimes I take a vacation and I pin this on someone else, but normally I'm your host. Welcome back. If this is not your first episode, really glad to have you here once again. If this is your first episode, you picked a good one. We have a fantastic chat today about automation and automation in logistics specifically. Hope everyone in the US who's tuning in had a great Thanksgiving last week. It seems so far away. This week has been absolutely nuts. It's like, as I was saying to a colleague earlier this week, it's like no vacation, no good vacation goes unpunished, right? You always have to make up for lost time when you come back. But I had a great Thanksgiving, very relaxing. Didn't have to go on a plane. Is always a win. But it's great to be back with you all. Before I jump into news of the week, just wanted to mention again my newsletter, which Nicole just popped up on the banner. Please make sure you're subscribed for that if you haven't already. Also wanted to mention once again TPM Tech, which is coming at you very soon. We're like 3 months out, less than 3 months out, which seems insane. February 23rd and 24th in Long Beach, California. It's the 2 days, the Thursday and the Friday right before TPM. You can use the code that's rolling across on your banner right now to get 25% off on new registrations for both events. If you've already registered, don't try to go back. Sorry, too late. We're not Target. We don't take any kind of returns, but would love to have you in Long Beach with us to join us. It's going to be a great event. I'm really close to putting together, to finalizing the program for that. We also announced a couple weeks ago the DevCon aspect of it, which I'm super excited about, and I wrote about on LinkedIn earlier this week. So make sure you check that post out. Basically, that post was about soliciting ideas about what the community should talk about at the DevCon. And I'll be putting together a list and going back out with that. I really want this to be kind of like community-led, very open, transparent. Like this has to be valuable for you or it doesn't work. So just let me know. All feedback is valuable to me. Just eric.johnson@spglobal.com is probably the easiest way to get me feedback, or Twitter, LinkedIn, WhatsApp, text. I'm not on Signal and WeChat and all the million other ones, but you know how to find me. So let's get into news of the week because there's a lot as usual. Biggest news this week, obviously, very clearly, was the news that Maersk and IBM are shutting down TradeLens. TradeLens had become kind of this fairly well-known brand in the global logistics industry on the technology side, but I think there was still a lot of misunderstanding or confusion or lack of understanding about what they actually did. Primarily, they were trying to develop solutions that were nominally blockchain around electronic documentation and global visibility, containerized freight visibility. We could have a whole show about this, and maybe we will, right? Just a month ago, we had TradeLens CTO Christian Hammer on. So I think the abruptness of this kind of caught a lot of people off guard, including to a certain degree myself. It was one of those things that was both shocking and not shocking. The reality is it's an insanely competitive market, both of those areas, especially the visibility side. There were some cultural, structural, and kind of competitive and pricing constraints that really never let this thing get off the ground. There's lots more for me to sort of discuss about this, and you'll see more reporting on JSC.com about this in the future. I think today we posted a commentary from Lars Jensen that goes into the TradeLens kind of postmortem. There's tons on LinkedIn from a bunch of different people who know the industry well, and their thoughts of, it doesn't take, you can kind of throw a rock on LinkedIn and hit something that touches on people's thoughts on TradeLens. So definitely encourage you to learn more about that, or reach out to me if you have any thoughts. Another interesting development this week was OneRail announced a $33 million Series B funding round. Interesting from the perspective of it gave me a chance to finally dive into this platform that a lot of people have been talking to me about. And also, it's a pretty hefty round in this market. We've talked about this a lot over the last 6 months. It's an interesting VC market right now. In fact, our last episode we had Shireen from Maris Growth, and she talked about this as well. But it's not that companies are not getting funded. It's just the diligence is a lot more. It's a lot more drawn out. It's a lot more theoretically, a lot more intense. And Bill Catania, the CEO for OneRail, definitely emphasized that there was just a lot more diligence into this round than their previous two rounds, which both came during the pandemic, where there was just a sort of feverish activity about getting into logistics startups. OneRail is really interesting, right? They've grown a lot during the pandemic, and they're sort of focused on coordinating last mile and not just using it as a platform to coordinate, but also direct contracts with a whole bunch of different courier services. So it's a very interesting approach. He called it kind of a managed service approach to final mile, as opposed to just sort of access to couriers. It's a little bit more involved on the execution side. So definitely encourage you to read the story and just find out more about OneRail if you're interested. But huge funding round in this environment, no doubt. So I wanted to address a couple other things that have happened since our last episode. Both AWS, and I'll start with AWS. This week, I think they had a big conference. It was in New York, I believe. I may be wrong on that, but I know they had a big conference. Announced a supply chain software sort of platform. I'm putting up the Wall Street Journal story on this because I haven't written about it yet. I'm still trying to get my arms around what it means, what it is. There was a really interesting LinkedIn post by a guy named David Landau, who is formerly of a company called Cloud Logistics, formerly with Blue Jay Solutions, and is now with Transporion. And he wrote a really interesting commentary on LinkedIn about how this platform in particular, he sees it as an inventory optimization play, and especially for companies that are not in retail. And the reason he said AWS is trying to create a beachhead not in retail is because there's still lingering reluctance for retailers to jump into bed, especially with a sort of all-encompassing system, supply chain system that's being provided by Amazon for probably understandable reasons. So it's a very interesting play. Amazon, no secret, they've been making huge strides in a range of different ways in the logistics industry, from being a provider itself to AWS being kind of like the playground for a lot of startups, and now kind of getting into the solution space more directly within AWS. So lots to discuss on this at some point down the road. Maybe I'll try to get someone from AWS on the show one time to explain what this actually is. And then the last story, and it's related, is the week prior, Microsoft unveiled what they called a supply chain platform. And the pre-Thanksgiving newsletter that I did was actually a guest commentary from another guy, coincidentally at Transporion. They have lots of comments, or lots of thoughts on this. Is Jonah McIntyre at Transporion did a whole breakdown of what he saw the announcement, and his view. Definitely encourage you to read the newsletter, but his view was it was more about marketing their existing solutions in such a way that people could see the through line between things as dispersed as Power BI and Teams, and how those apply to a supply chain kind of management environment. So definitely encourage you. There's lots more detail in the newsletter than I'm going to be able to say in 1 minute. So definitely read my last newsletter. My newsletter today, I'm a little bit late on. The vessel arrived late today, so it will come out after our show, not before. So sorry if everyone was waiting at 9 a.m. Eastern for that. It's going to be a little late today. Sorry. But I am really glad you all are joining me today, because my guest today is Chad Olesen, who's CEO of Avrl. If you've never heard of Avril, don't worry. It's not like a name brand yet. But I'm really eager to talk to Chad about what Avril is and his background. And maybe we can start there. Chad, thanks so much for joining us today.
Eric, thanks for having me on, man. A little bit about me. So my name is Chad Olesen. I'm the CEO of a company called Avrl. So Eric, I'm gonna correct this. So you're good.
So I'm so sorry. Avrl, not Avril.
So essentially what happened and why we go by Avrl is the original name of our company was Advanced Voice Research Labs. And essentially we started out as a natural language processing company. Those of you who don't know what natural language processing is, you can think of like Amazon Alexa. We do a bunch of stuff to connect this disparate systems. And actually, we've been working on our tech. We brought it out of college in New York in 2012. We've been working on it for a long time. Essentially, we ended up being found by transportation. So we've taken some money from companies like SAP to come in and connect disparate systems. And essentially what had happened is like through this gravy yard of us navigating the market, we've done a lot of work with like oil and gas brokerage, retail, CPG. I spoke at an event in 2019 and randomly JB Hunt was there and saw us, had us come in. We ripped and replaced a bunch of automation. And that's kind of how we ended up navigating into transportation. So because we don't do a ton of voice tech anymore, and most people use our natural language processing to use for automation, we go by Avrl.
Got it.
Yeah. You're good.
It's one of those assumptions that I'm glad you can clear that up. So what really interesting, and we'll get more into kind of like what exactly you do. What's your background like before you found? I mean, like this has been what
this is it, man. Yeah, we've been working on this for so long, and you know what's kind of interesting is we worked in supply chain. We knew that supply chain was massively disparate, and really not connected since we entered the market. I think we incorporated our company in 2017. But what was different is that pre-COVID, everyone, I'm going to use a word that I don't know if I should use, but supply chain was kind of bastardized. It was thought of like a cost center. And the moment that COVID happened, people started to realize that you could actually impact revenue. And a lot of companies use us to maximize yield when we start to look at supply chain. And so for us, we end up literally automating this and connect systems that don't communicate via API.
Yeah, which is the vast majority of systems still in logistics today, right? So
it's kind of an interesting topic, primarily because people are like, oh, API is the future. And I think that in many industries, yes, APIs are the future. They've been around for a very long time. But when you have three parties that don't necessarily like one another or get along that well, APIs become really difficult. And it's not necessarily even connecting them, but even the communication string where we would see like a retailer might hide hazmat in an API call in the header versus putting it in an API field. And so a 3PL or a carrier could misquote it. And so what we really need is the industry to all decide that we really do want to work together to move forward for those types of technologies to be really, I think, adopted.
That's super interesting. And we can probably go down a minute rabbit hole on APIs, but I've never heard someone sort of describe the friction around it in those terms. It's always been described to me as, well, EDI works well enough and people are not inclined to like go after things that work well enough. And honestly, for some companies, EDI is like still weirdly aspirational, not even like, right?
Yeah.
So yeah, very interesting. And maybe I need to have you on to just talk about that stuff, because that's super interesting. But I have so many questions to ask you, because we had a chat a few weeks or a couple months ago about automation, and it was a fantastic conversation, which is why I wanted to have you on. What do you think in the logistics industry? How do you think people understand, like truly understand what automation is and what it means to the industry?
No, I don't. And I don't think that it's anyone's fault, but I don't think that the discussion has been big enough around what automation actually is. most of my customers are, top 100 carriers, top 100 3PLs. And I think that, the vast majority of the industry would be very nervous if they realized the levels in which they're automating to reduce cost and to maximize yield at the exact same time. And in a market like today, where there's so much margin compression, what they're wanting to do is making sure that, they're still net positive on shipments, regardless of how the market has shifted. And I think it goes so much deeper than even like people not realizing what's available in the market. But I recently went to a conference in Tennessee, and it's for a really large TMS provider. And they had a panel on automation, and the two people who were leading the panel run trucking companies, and they talked the entire time about not using paper checks, all while there's companies out there who have fully automated their appointment scheduling, their spot bidding, etc. And I just think that maybe the TMS providers they don't want, I think, to have like a third-party automation company to come in and automate on top of their portals, because they want to sell the workflows inside of their TMS. They want to sell those futuristic things. In reality, there's people that are doing it today.
Right. Yeah, I've sort of described this, and I had mentioned CPM Tech, and that's very much more of an international focus, going to be an international focused event. But there's a session that I described sort of like the under the radar progress of automation, right? Like the imperceptible kind of ways that it's being like put into play by a lot of companies. Mm-hmm. Sometimes even people within those companies aren't even realizing that it's happening. So if we drill down to be a little bit more specific around logistics, what are some of the areas that there's probably been a lot of progress that people might not even realize where there's been progress?
So I think like one of the areas is that, people talk about automating like spot bidding. And I think traditionally people automatically navigate to think that that's API based work. And I don't think that they realize that a lot of the bigger players have fully automated spot bidding, even on web portals, reverse auction portals, etc. And I think that at the same exact time, people think of automating like appointment scheduling with platforms like OpenDoc. They don't realize that you could literally go on and automatically schedule an appointment on Dollar General's portal, and the execution is completed the moment that a shipment's built. And I think that as you start to dive deeper down into the supply chain, like, uploading a parcel delivery receipt or POD request, a lot of our customers are really deep into those automating those types of systems, so that they don't need to nearshore, so that they don't need to continue to add on operational costs, so that they can have the same margin that they've always sought for, but they can operate at a lower cost. And I think that affects the overall market massively, especially in the kind of market conditions that we're experiencing today.
Yeah, the tide has gone out, right?
Yeah.
So it's like all those costs that were a little bit hidden by huge, a really frothy market are easier to see now. So super interesting. Where do you see automation still at an embryonic stage, even with like your advanced sort of sophisticated customers?
I think that there are some companies really trying to solve the problem that I'm going to describe. But I don't think that they're far enough in yet to be having the impact that they want, which I think is a carrier sales on OTR, or for freight brokers. And I think that the industry is definitely relationship driven. And that relationship that someone has with the truck driver is kind of an interesting topic. Primarily, you had companies like Convoy come out with like their like platform. JB Hunt came out with theirs, CH has theirs, Echo has theirs, etc. You get application fatigue. And I think that actually kind of like reverts back to carrier sales being more on the phone more. And I think that what's kind of interesting is I've talked to a lot of people in the market is carrier sales is such a relationship driven industry that like you could have like the best carrier sales rep and he leaves and goes to another company, and so does the carrier. And it's such an interesting topic that I don't think that we talk about enough as an industry either.
So is that because like one of the areas that I think about from an automation perspective is what, especially as it impacts intermediaries, right? They seem to be like at the core of all of this. What part of a freight forwarder, what part of a freight broker's like life cycle is automatable and what is not? Like, is it all automatable? Is 80% of it automatable? And this seems like what you're bringing up is something. Is it something that just is never going to be automated because of the nature of the like culture of the drivers, or is there a way through this that you see?
I think that it's definitely automatable, but I don't know at what point in time that happens. And if you go out and you look at, majority of the transportation companies that exist in the market are fleets of like, 3 to 5. Those people will never be able to set up APIs connectivity, which means that you're not going to be able to fully automate carrier sales the way that you can do other things. And when you start to look at I'm going to use a politically correct term, how technologically novice the industry is I think that it's going to take a very, very, very long time. And I don't think that if we do get to the point where you could automate carrier sales for an intermediary, that I don't think that it's going to be the way that everyone has traditionally run a freight brokerage or traditionally done the way that you traditionally run carrier sales. I think that there is going to be a technology that's going to come in that will completely revolutionize it in a way that you've never even probably thought about before.
Well, so that's a good lead in. One thing I wanted to ask, and the banner is sort of alluding to it right now. Are there specific categories of companies that are more suited to automation than others?
Yeah.
Or is it more of a company philosophy thing? Like if a shipper and a broker and a carrier have the same type of philosophy about being very forward looking, is there more in common between them than 3 freight brokers that have totally different philosophies?
I think it's interesting. I think that the freight broker needs to continue to run competitive advantage. And so I think that they're out innovating a lot of like the shippers and asset-based carriers, to be honest. And I think that when you look at like the freight forwarder, their market is really complex because you're talking international shipping with systems that don't even speak in the same exact language. That's really, really difficult. When you think of like the companies that we are seeing that we are automating the fastest with, they're actually companies who have tried to automate by themselves before and it failed. And that's an interesting topic, primarily because like if I walk into a 3PL or an asset-based carrier, even a shipper, and they've never deployed any type of robotic automation at all, what they think automation is a workflow inside of their TMS, right? Something that moves something in finance. The companies who have tried to automate web portals and it failed are my best customers that onboard the fastest, that move the fastest, because they understand the challenges and how complex it is. And they want to continue to just double down. It's working, double down, double down, double down. It's an interesting thing. I think that where the shipper market is more difficult is when you're in a large organization. I'll just, take like the top 5 retailers. They have massive technical teams. Now those technical teams, they're probably focused on a lot of e-com. They think of supply chain as in their warehousing. They're probably not focused on automation inside transportation directly. And I think that there needs to be third parties that come in to do that work. That said, the procurement cycles are really long. Legal is really complex. Also, you have to fight against a technology team that probably could do that work, but it's so low on the totem pole that they won't do it for years.
So you just hit on something that I've brought up a bunch in my newsletter on this show, which is the intermediaries are best suited to adopt technology across the board to me, because an investment has a much bigger impact on a bigger part of their business because they don't own assets, they don't own the cargo. You're totally right. Shippers have their technology needs are split across so many different parts of the business that, someone in logistics is waiting in line behind 20 other people that may have even after the last 2 years, that may have just be seen as a much bigger priority within the organization. So I agree. I'm seeing the openness to invest and to try and pilot stuff in the intermediary side way ahead of the other two categories.
Yeah.
So it's interesting you're seeing that as well.
And I think you could even break that down into like geographical location. Like Chicago is the most competitive market. The companies there are really hungry to compete and be aggressive. And that obviously comes from a massive broker that has like spun off tons of little smaller brokers. But if you go a little bit north into Canada, I actually think that the 3PLs and the carriers up there are several years behind what we're seeing even the US market. It's kind of an interesting topic. Yeah.
Well, what are, you mentioned like the types of customers you get, you're seeing like the most kind of traction with. What are the ones that have played around with this themselves and then turn to you? What are some red flags for you? Like when you go into a company and they're like, hey, I want to bring you guys in and automate everything.
Yeah, I think that companies who haven't tried to explore technology, those companies are traditionally red flag customers for us. And it's primarily because they don't understand how complex of an automation system it takes to go in and automate some of these processes. It could take weeks, it could take months, it could be a forever, like an evergreen project that continues to roll out. Because if you're a large asset-based carrier, you might work with 1,000 enterprise level shippers. That means you have to interact with 1,000 different web portals. That's going to take a very long time. It doesn't matter how large the technology team is. And mine's large. We have, I think, 88 engineers. And I think that for a lot of our customers, you get this balance of like, we want it like now and not being able to prioritize what's the most important thing. We see a lot of companies, and this is a traditional RPA play, they were like, we want to automate finance. And I'm like, oh my gosh, this person spends 5 hours a week doing this process when you have people spending tens of thousands of hours a year automating appointment scheduling. And I think they have a hard time prioritizing where they're actually spending time because of how many small processes do need to be automated.
So is a good sort of like internal preparation exercise to try to go through and really determine what amount of FTE hours are spent on each process? Or is that like, I mean, that seems very hard to do. Like it seems easy to talk about and hard to do.
I think that it's bigger than that. I think that, I'll use an example like spot bidding. You've got people spending 100% of their time. They all think they win 15% of the freight they bid on. It's a lie. They win like 4%. So you've got people spending 100% of the time winning 4% of the freight that they're actually participating in. That is an absolute waste of someone's time. And what ends up happening is as you start to dig into that, you start to realize, oh my gosh, we're only participating in 20% of the volume that exists in the market. Oh, that's margin expansion right there, right? And that's what, like, when we look at customers that we really like, they think about the market differently. So there's margin expansion and there's targeted market expansion. I like the companies that like targeted market expansion because we believe that for an intermediary, the only way to win this game at the end of the day is to lock capacity. We talk a lot about in the industry about gaining capacity. The customers who can gain it, that's fine. But if you can't hold it and make sure that you have freight for that carrier every single week, they're going to go somewhere else.
Yeah, super interesting. All right, let's shift gears. We could go like half hour on any one of these topics, but I have so many questions for you. You have been, you're one of my favorite follows on LinkedIn and have been for a while because you don't like, I mean, I think you're doing a good service, but you're sort of calling out, I think, what a lot of people know and feel, but don't necessarily say out loud. Let's talk a bit about the way automation is sold in the industry, right? Is there a bit of like snake oil around the way it's sold in your view?
I think this is an interesting question. I think that like the industry as a whole has a difficult time because of how everyone sells to shippers. So like a lot of the technology that's in the market is being run by people who formerly worked for a 3PL or a carrier or a shipper, and they got this idea and they wanted to start like a company. Yep. And then they've learned their marketing tactics and their marketing strategies from the industry, which is basically shouting with a megaphone about the impact that you're making and walking like maybe on a gray line. And we see the terms like proprietary thrown out a lot, where it might be like a proprietary front end, but it's bolted on to another technology that is owned and operated by somebody else. And I think that that's a really not fair thing for the industry, primarily because of how technologically novice the industry is. And it's easy to believe things via marketing. Our team's approach was, hey, in an industry where everyone's standing there shouting from the rooftop, we do this, we do this, we do this, we decided to not market and to deliver based off of service. And we've grown almost 100% by word of mouth, which is kind of interesting. And I think, Eric, everyone would be shocked if they realized who texts me or who direct messages me when I post those posts, because I do believe that everyone thinks about those things, but they feel threatened by the politics in the industry. I, for some reason, have kind of feel like I've fallen outside of the politics where I can say whatever I want. And the people who will still work with us or work with us, they probably like what I'm saying. The people who won't work with us, they might not like what we're saying, but that's okay. The market's massive. But I do think that the days of companies delivering stale tech or bad tech or tech that doesn't work are going to be over pretty soon. Like you posted or you mentioned earlier in the session, like Amazon stepping into supply chain, Microsoft stepping into supply chain. These guys are really smart. They've been following that industry for a very long time. And as soon as you start to have really core technology companies come in to deliver technology, it's going to be really interesting to see how a lot of freight tech companies operate. I believe that many freight technology companies couldn't operate in any other industry. And that's really scary to me, because for us at Avrl, we work with oil and gas brokerages. We work with retailers. We work with CPGs, auto manufacturers, and we are taking technology that we've seen successful in other industries and bringing it into transportation and logistics, not the other way around.
Well, and you know, you mentioned SAP earlier, right? Like SAP is everyone's favorite whipping boy, but it's also like, if not the biggest software provider in logistics, it's SAP or Oracle, right? And it's like, you know, I don't write about them enough, honestly, right? Like it's very easy to get kind of distracted by the new shiny thing, but
it's kind of funny what you're saying. So I just met with a shipper and we were talking about building their actual RFP. And that comes originally from demand planning, and demand planning software is SAP. And when you look at that ERP system for every single shipper, all the orders live in SAP.
Sure.
Now, if that can't connect to the TMS or the WMS, you have some really difficult challenges that really do end-to-end impact supply chain.
So I wanted to double back to something you had mentioned before, which is this idea that like the companies that have been preparing themselves for where the market is going are going to be, you know, in so much better shape. And you know, obviously you think about that intuitively, that makes sense. What does that mean in terms of how companies should prepare themselves to automate? What is appropriate to automate? Like the classic kind of skate where the puck is going, not where it is question.
That's a difficult question. And I think that what's difficult about that question is like our economy heading into this like global recession, people cutting spending. And I've seen in transportation logistics that companies are slowing their adoption with technology. And I think that that's not everyone. That's a small grouping of people, while the bigger players are doubling down on the investment in technology. And I was just at a conference in Phoenix a couple of weeks ago, and one of my customers who runs a $2 billion brokerage came up to me and he was like, I'm so excited for next year. We're going to build the roof or repair the roof while the sun is shining. And what he's talking about is when it rains back the other way, money, They're going to be so ready with automation that they're going to be able to operate at their same profit margin that they want to hit as a brokerage, but it's going to be less than everybody else's. And I think that it's scary because the consolidation that we're going to see in the couple years to come aren't going to be that traditional M&A consolidation that we've seen. But the barrier to entry for like a 3PL or an asset-based carrier is starting to become like really, really difficult. And the way that technology is moving today, you can't start a freight brokerage anymore with just a phone and a computer. I think that those days are going to be long behind us. And I think that the barrier to entry is going to be really difficult for a lot of companies.
So let me ask a quick question that just sprang to mind about that M&A piece, right? So let's take that company that's doing like the prep work, like investing into a downturn. So they are that much more ahead of their competitor. What if they find a distress asset that's just like a diamond in the rough that they want to acquire, but that company there's going to be such a lack of alignment between what they've built from an automation perspective and the asset they're acquiring. How do you go in and like align those two things in a relatively short period of time? I know this is like an abstract question, right? Because I'm not talking specifics, but like
I actually have like an exact answer for it. And I think it's going to be really scary, which is why I don't want to say it. But, I spoke at Evan Armstrong's event like a couple of weeks ago with a lot of bankers. And in the past, I don't even know how many weeks it was since that, maybe like a month and a half ago, I've had a lot of bankers introduce me to 3PLs that they're trying to broker a deal so that I can help them reduce cost of carry before the acquisition happens. And I think that what you're going to see is that bankers and M&A people will actually seek technologies to deploy into companies that they're hoping to broker a deal, or vice versa. And I think that you're going to see the technologies that are really, really, really impactful in the industry. They're going to get like literally pushed forward through this market.
Very interesting. Very interesting. Wow. A lot to think about. So I wanted to address one thing that I think it's in some ways is a different topic from automation, but it's also super related to automation, which is something that you and I have both written a bit about, and it's sort of come up into like the public conversation around Twitter, right? Elon Musk obviously famously let go of like a huge number of Twitter employees. There's been a million things written about it. I don't want to get into whether it was right or wrong, but I do want it to use that as an example of like that question of is there too much headcount bloat in software in general, in your view?
So I'm going to take a two-pronged approach to this question because I want to separate like large tech away from startups, but I think that it originates from startups. And I think what it comes from, and I don't think everyone's going to be happy for me talking about this, but when you take money from a venture capital firm, their goal for you as a startup is to continue to spend cash and to continue to need to fundraise. That is a thing that happens. And when you're a startup, what you really should be doing is trying to find your path to profitability, in my opinion. And that doesn't mean, like you need to be profitable today. Doesn't mean you need to be profitable tomorrow. But if you look at Amazon, who's a behemoth of a company, Jeff Bezos always had a path to profitability. Always. There was an end goal that was there. And I think that has kind of been confused with a lot of startups where the VC pumps money in, they overspend, overhire because they go into the market and they look at these companies and they're like, oh my gosh, we need to bring in a customer success team. We need to bring in this team. We need to bring in this team. We need to bring in this team. And to be honest, Eric, I've done that before. And it was terrible. And I think that sometimes the worst thing that a startup can do is to raise money because they think that they need to raise money rather than raising money for growth. And I think that is actually where a lot of the bloat comes from, is you think that you need to build this massive sales organization, this massive customer success team, but you're building for the future. But for a lot of startups, there's no path for that future. And so I think like when we look at our organization, we are a team of about 100, and we run extremely lean. But the point of us running lean is so that we really figure out where we need to hire. And yeah, that might be a customer success manager, or that might be a director of operations, or that might be a CFO, et cetera. But for us, what we're trying to do is let the market tell us what we need, rather than trying to assume what we need as for employee count or for employees, et cetera.
And how does that picture different? Because you had mentioned like at a big, established software company, like how is that different, right? There must be some bloat at those companies as well, right?
Oh, absolutely. I mean, I've hired people from large tech companies that don't work for me anymore. And I literally, I have this project manager in my mind that I hired, and she's a project manager. She quit after like a month, and she was like, I don't have time to go to the bathroom. I don't have time to eat. And I was sitting there and I'm like, but you're the project manager. You control your entire schedule. You control your entire project roadmaps, et cetera. And I think that a lot of, the technology companies were trying to get the best talent, and so they make work much more relaxed. Maybe they're not working or grinding as hard as like a lot of startups do. And I think that because of that, the bloat isn't necessarily, maybe they don't have the employee count, but I think that they segment the work down to to each person, that they do like one thing. Like we meet these engineers all the time that come out of school and they're like, I want to work for Google. And I'm like, you realize if you go and work for Google, you're going to do one thing. And that one thing you're probably not going to like, and you're going to have to work there for decades to get to where you actually want to go. And I think that that is something that happens in technology.
Yeah. Super interesting to get your thoughts on that. I think about this a lot, and I sometimes wonder whether I am part of the problem on this, because there's only so many metrics to measure companies that are not public, that don't have a big kind of like name and footprint. There's customer growth, customer count. Everybody throws percentage numbers at me without like a base to compare it to. Employee and fundraise, those are two things that most companies are willing to talk about, right? So those can be metrics that can seem like very impressive, but are they impressive? If you're a pure software company, is it impressive to triple your headcount in 1 year, right?
No,
maybe not. Maybe it's totally unimpressive, right? So,
I mean, I sit on the side of the fence when I watch a company like fundraise. I'm like, I don't know. Like, I don't know if that was a good idea or not.
Very interesting. All right. Well, we have we're coming up on time. My favorite question to ask at the end of every interview: who's your favorite band or musician? And you have to tell me why.
So I just got my Spotify thing. Like everyone's posting it online. Yeah. My favorite musician is this band called the Marcus King Band, and they're kind of this like cross in between like rock, jazz, and I don't know, like maybe like almost like kind of country in the way that like Chris Stapleton is. And they're my favorite band because I like rawness. I like I don't want to say, this might be a bad thing to say. I like real music. Like I like when they bring percussion.
Not polished.
Yeah. Exactly. Yeah.
Okay, interesting. Well, there's another band for everyone to check out. I said last episode I need to like assemble a Log Tech Live playlist, because everyone's been suggesting really cool things. So
what kind of music do you listen to, Eric?
So a wide range, but I'm such an old fogey now. It's like if it was after 2002, like I don't like it as much as pre-2000. I'm so stuck in like what I listened to in high school and college.
Yeah.
Like my favorite band of all time is Rush.
Okay, cool.
I love 90s hip hop. I like, but there's some bands that I still love today. So, I mean, some newer bands that I love today, but definitely very stuck in the 90s and early 2000s. So
that's cool.
Yeah. Good question. No one's ever asked me that.
Well, next time when you start your show, you just start with like a walkout and it's Rush.
There you go.
Just force everyone to listen to it.
There you go. Well, I put a lyric from Rush in every newsletter, so hopefully they're finding it that way. So
I like that.
Yeah, cool. Well, Chad, awesome conversation. Would love to have you back at some point. And what's the best way to reach you?
Email chat@avrl.io.
Cool. So that's chadd@avrl.io.
Yes.
Awesome. Cool. Definitely encourage everyone to reach out. Thanks so much for joining me. We'll talk soon. Have a good holidays.
Awesome. Thanks, everybody. Bye.
All right. We are just about done. Just enough time for dad joke of the week. This is from my son. It's really bad. I'm just giving you a warning. It's not my best one, and definitely not his best one. But please direct all complaints to him. What happens when an owl hits the brakes? It comes to a screeching halt. Yeah, he says he made that up, but I think he got it from a joke book. It's a little too weak for him to have just made that up himself. So anyway, I'll come back with a better one mid-December in our next episode. So thank you, Chad. Thank you, obviously, everyone who tuned in. Thanks to Nicole, as always, for doing an amazing job on the production side. And we will see you in 2 weeks for our next episode of Log Tech Live. Same time, same place. Thank you, everyone. Have a great weekend. Bye-bye.